So in case you've been on your summer vacation and you haven't been paying very close attention, the markets had a pretty rough week this week. So in this video, I'm going to tell you why the market sold off and what you should be doing about it. And I'm going to talk specifically about what's going on with XRP and Bitcoin. So let's talk about it. It is Sunday, August 3rd, and I want to talk to you about what's going on in the markets right now because it gets pretty wild. Last week, the markets took their biggest hit in several months. The Dow dropped nearly 3%, and the S&P 500 lost over 2%. And the small caps got crushed. And the cryptos, man, they really took it on the chin. And I really want to talk about that, particularly in this video. Okay, so what happened this past week that made all the markets go down so dramatically? Well, in this video, I'm going to talk to you about 5 things that happened that caused the markets to go down. And then I'm going to tie it all together and give you an idea of what you should be doing. Reason number 1 is that fears of a potential trade war is back. President Trump announced several new tariffs on many different products from several countries, over a dozen different countries. I mean, we're talking Canada, India, Taiwan, and several European countries. And some of those tariffs are as high as 40%. Now, this wasn't expected in the light of all the big wins that Trump has had lately, striking deals with many different countries. So the markets really, revisited their fears from a couple of months ago when the tariff plans were initially announced. So the last time we saw these kind of announcements from President Trump, the market sold off huge. Well, here we are again. The same headlines are causing the same kind of havoc right now in the markets. Now, the second big issue was the U.S. jobs report that was released this week. The jobs report came in much weaker than the street was expecting. We only added 73,000 jobs in July, which was way below the forecasts. And to make things worse, the jobs report for the previous several months were revised downward to the tune of more than 250,000 jobs. Okay, so investors are starting to ask, is the labor market finally starting to crack? Weak jobs growth means slower economic activity. I mean, people are spending less because fewer people are working. So that raises the specter of a recession again. The third reason is the bond market sent a warning shot this week. The 2-year Treasury yield dropped by about 25 basis points in just a few days. That's a huge move. And the dollar dipped lower. Now, this is what traders refer to as a flight to safety, okay? Remember, the value of bonds have an inverse relationship with the yields, right? So if the yields are going down, that's because the value of the bonds are going up. And the reason why the value of bonds are going up is because people are buying them. People are fleeing toward perceived safety. So right now we have a pretty significant risk-off event going on where people are fleeing away from what they perceive to be speculative investments, risky investments, into safety. Now, that kind of movement isn't necessarily bad, but the speed in which that the yields came down is really kind of a warning flag, and it usually indicates trouble. Okay, the fourth thing that happened this week is that we've had several earnings reports out right now that were a very mixed bag. Tech giants like Microsoft and Meta, they crushed their earnings, but Amazon and several chip makers really disappointed. And the fifth reason are technicals and seasonality. The technicals turned bearish, and I'm going to show you the charts here in a second. The S&P 500 this week formed what's known as a bearish engulfing candle. And the Dow Jones Industrial Average and the S&P 500 broke below its 20-day moving average. Now, you got to combine that with the fact that it is early August, okay? This is the season when the market typically is soft. The truth is, up until now, during the summer, the markets have been doing something unusual. Usually the markets during the summer sell off or just don't do a whole lot of anything. That's just the season. So far, we've been fighting that tradition, but now it's catching up. I mean, it is early August. So you take all these other considerations and throw in the calendar, okay? So we shouldn't be too surprised that the markets are selling off, in that regard. So let's take a quick look at some of the charts. Okay, so let's start by taking a look at the Dow Jones Industrial Average. And look at the week we had. Yeah, we broke through a very important near-term support level at 43,000. That's the 1-month chart. Let's take a look at the 3-month chart. So the next significant support level for the Dow Jones Industrial Average is way down here at 42,000. Now, I don't know whether we're going to get there or not, but technically speaking, that's where the near-term support is. And for the S&P 500, look at this. Okay, if we draw a line here, along this trend line, an important trend line has been broken. So the uptrend that we have been enjoying since May has been broken. Now, the next important support level for the S&P is way down here at around 590 and change. So the truth is that technically speaking, this is a pretty important week, okay? So sentiment has changed, at least for the short term. Now, what I would expect to happen is sometime soon in here, there'll be some kind of dead cat bounce. There'll be some kind of, I don't know from what level, but there should be some kind of a bounce. The question is what happens after that? But before I give you my conclusions, let's take a look at what's been going on in the crypto space, because that's even more damaging. And I want to zero in on what's going on with Bitcoin and XRP out there. Okay, so Bitcoin, as of this recording, again, it is Sunday, August 3rd, is trading at 113,000 and change. That's the 1 year chart. Well, let's take a look at what's happened in the past month. Okay, so in the past month, look, Bitcoin started out, with a tear early in the month. It got as high as 122, but now it's all the way back down to 113. And how about our beloved XRP, which has really been the darling in the crypto space the past, really a couple of months? Well, XRP is trading under $3. It's trading at 289 as of this recording. What does the chart look like? Okay, again, this is the 1 month chart on XRP. Look at how far down XRP has come since putting in a high at 364. So XRP has had a really nice haircut. Now it's still up month over month. I mean, in fact, it's up 30%. Look at this. It's up 30% month over month. Still, even with this pullback. But percentage-wise, this pullback that we've had, with the markets is pretty significant. Now, keep in mind that cryptos are far more sensitive to sell-offs than the overall markets, like the stock market. Remember, the entire crypto space is tiny in terms of market cap relative to the stock market and really, the bond market, right? I mean, it's nothing. So when there is a risk-off sentiment by investors in general, the cryptos get sold first and they get sold hardest. Because when people want to de-risk, okay, they're going to sell their riskiest assets first. So we should not be surprised that this crypto space is down percentage-wise more dramatically than the other markets. That's just the way of the world. That's the life of a crypto investor, okay? So let me wrap this up for you. Well, tariffs and economic data are likely going to be the headlines that drive the market for the near term. And if the labor market continues to slow, that's going to put more pressure on the Federal Reserve to lower rates. But they will also be watching inflation, which complicates things. So in the end, last week's sell-off was not caused by any one thing. It was a perfect storm of trade tensions, weak jobs data, bond market alarms, mixed earnings, and bearish technicals. So what should you be doing in the face of all this? Well, listen, I'm not a financial advisor, right? Always do your own research before doing anything with your money. I think it all comes down to what your time frame is in any particular item, particularly with something like an XRP, for example. Now, I own my XRP as a long-term play with a 5-year time horizon. So I view this sell-off that we had this past week as a great buying opportunity, the chance to buy more of it. I consider it a gift, but I understand that any XRP that I buy now might be an even better price next week. But personally, I'm okay with that because I'm looking down the road in that particular situation. Now, if you're a trader, okay, this is a trader's market. So if you're an active and disciplined trader, you should be loving this because as traders, you can make money in both kind of market conditions, right? All traders really want is volatility. And boy, we're getting that these days. So there is your summary of what happened this week in the markets and why. If you don't mind, can you support my channel by hitting that like button? It doesn't cost you anything. And leave a comment. Ed Anderson, live from Minnesota, signing out.
Copy that.